August 27th, 2024. I have some stuff to do a little bit later today, so I'm starting the video a little bit early. And as a reminder to everybody, I will not be around on Thursday or Friday, so there will be no daily review or trading session videos. I'm just going to post a video on second leg traps sometime on Thursday, probably maybe around noon Eastern Standard Time. Or, anyways, yesterday, I'm going to turn the bar counter on for all, but we had a wedge. We had a wedge yesterday right here. 1, 2, 3. And then we had a breakout attempt below the wedge, and we ended up getting a reversal up. And the breakout attempt below the wedge ended up being the low of the day. Now, this could be looked at as 1, pullback, 2, some sort of second leg trap. So you have a failed breakup below the wedge, possible second leg trap, a lot of reasons for the market to reverse up. Anyways, coming into the day, I was a little bit more bullish, because we had an IOI pattern on the daily chart, and I thought that the bears who sold below here probably were not going to do very well in their trade. However, it is still a sell signal bar. The bears were hoping we had an IOI and a failed breakout above the breakout mode pattern yesterday on 8/26. And so this bear bar closing near its low is a possible sell signal bar. When you're getting a possible sell signal bar, by the way, I'm curious, are we going to close around 50%? The pullback, it's very possible, I think. Just check. So 50% is around here. You can see we're oscillating around it. We're paying attention to that 50% pullback of this entire sell-off. But anyways, something to pay attention to is yesterday's low. Yesterday's low is going to be an extremely important magnet for traders today. And I think most likely, again, when the day opened, we were going to have to trade below yesterday's low. So bar one, a bear bar. You can see we had 3 bear bars going into yesterday's close, and then a big gap down, which essentially would have acted as another bear bar. So bar 1 is another follow-through bar for the bears. The bears, they triggered the sell below yesterday's low. In general, when you have a daily chart signal bar like the prior day's low, if the market is going to trigger it, or if it's going to work, the market usually will trigger it and then pull back first. So it's not surprising we pulled back on bar 1. The bulls are hoping it's a failed breakout below the wedge, and we're going to get a reversal up. However, no bulls want to buy above the bear bar. Bulls want to buy above a bull bar closing near its high. Bar 2, a bear bar closing near its low. You can see we went down on bar 1, up on bar 1, and then down on bar 2 again. So this is possibly a second leg trap, down, up, down. So 2 legs down. What are we going to get from here? Well, the bears are hoping, you can see we still are technically in this sell to close bear trend. So the bears are hoping we're going to get a strong breakout below the wedge and probably some sort of measured move down based off the height of the wedge, maybe the 43 close to the 56 low and a measured move down. What about the bulls? Well, the bulls think it's probably a second leg trap and we're going to get a failed breakout below. The bears, if this is going to work, I think they need more. I think you need another bear closing far below far below yesterday's low if this is going to be a big bear trend. So I don't really think the bears are going to do too much here. If anything, I'm waiting to see if we get a strong looking reversal bar up and a bull bar closing near its high that I can buy above for a possible low of the day. And I mentioned this, but yesterday you can see we had a bear trend that was a little bit difficult to get in on unless you sold below 8. The only stop entry in here that was really good was selling, or reasonably good, was selling below 8. Even that, it's climactic and it's not quite as good as it could be for a lot of reasons. And we had a similar situation as today. So the market often likes to repeat patterns. And you can see yesterday we had a bear trend, but it was difficult to get in on. And today we had a bull trend that was difficult to get in on. All the tails and stuff throughout the bull trend were one of the reasons why it was less likely to last all day. Usually if a bull trend is going to last all day, it'll start off a little bit stronger than this. I don't know if we even got the measured move up. We got into the area, but did not quite get the full measure move up. So bar 3, a reversal up for the bulls, but a huge tail on the top. I think the tail on the top is a problem. If I were looking to buy, I was looking to buy, but I wanted bar 3 to close on its high. And the big tail on the top and the big tail on the bottom, for me, makes me think that I would just rather wait and see if we can get one more good looking follow through bar. So the bears are hoping that bar 3 is just a pullback in their bear trend. However, the context is good for the bulls, right? On the daily chart, we're triggering a sell signal bar that's really not all that great. So those traders might end up getting trapped. And we have a bull bar after a failed breakout below a wedge. So I think the context here is really, really good for the bulls. Can you buy above 3 and take a chance that it's the low of the day? It's probably not wrong to take the buy, but you probably only have maybe like a 1 in 3 chance of it being the low of the day. And I thought if 3 closed on its high, there was a high probability of a swing up. So I was pretty disappointed that 3 closed the way it did. And so I decided to wait and see if 4 was a bull bar closing near its high. And if it wasn't, then I would, if it was, then I would have bought. But again, really difficult to get in this market. 4, another bull bar, but why do we have huge tails on the tops and bottoms of 3, and we have huge tails on the tops and bottoms of 4? Well, one of the reasons why if 3 had closed on its high, it would have been a good trade is because the bulls, you can see the bears who sold below 2, they would have been trapped in if 3 had closed on its high, and they would have been forced to exit, and that would have driven the market higher. And the bears who didn't exit above 3, and they waited for 4, if 4 had been another big bull bar closing near its high, it would have again driven the market much higher. But instead, on bar 4, since bar 3 was not as good as it could have been, during bar 4, we traded back down to around the bar 2 close. So the bears who sold below bar 2 and scaled in were able to avoid a loss down in this area. So that's really not good for the bulls. That means there's less trapped bears, less fuel to the fire, so less likely we're getting a bear trend day. Bar 5, I think, is the give up bar for the bears. Again, the bears were hoping that this was just some sort of pullback, maybe two-legged pullback on a smaller time frame. And that we're going to get a lower high from this sell-off, but I don't think it's really all that ideal. If you're a bull here, you're probably, or most traders, I think here were looking to buy, but it was just really difficult to get in a way that seemed like it was going to form some sort of sustainable trend. So the whole day, really, there weren't a lot of great stop orders today. There was a couple, but they pretty much all ended up being scalps. 5, another bull bar, like I said. So I think this is the give up bar for the bears. If you'll notice, we never got back to the bar 3 high. So a bear who sold above bar 3 and scaled in higher during bar 4, I suppose, they were never able to make money. And then they continued to get trapped all the way up here. So it's a small detail, but it's important that the bar 3 high and the bar 5 low do not overlap. And you can see bar 5, a climactic bar. So do you want to buy the close of 5? Well, it's kind of tough to buy the close of 5 because there's a big tail. These have big tails. It's true that this is really strong, and if we do pull back, it's going to get a higher low, and we're probably going higher. It's the reality, but I think it's kind of hard to want to buy in here. So I'm looking to buy a pullback. You can't be too picky when you're looking to buy a pullback. You just need a bull bar closing near its high. But even in here, we were really never able to get a bull bar closing near its high. The market's going to close in a minute, so there's going to be a bell. I assume it'll get picked up on the recording, but there's going to be a random bell in a minute, so just keep that in mind. So bar 6, an inside bar. For the bulls, it's a high 1 buy. So they have a bull trend 3, 4, 5, and an inside bar, high 1 buy above bar 6. Am I willing to buy above bar 6? No, it's a bear bar. I really don't want to buy above a bear bar, especially, when this is not all as strong as it could be, right? We have tails 3, tails 4, tail 5. So if I want to buy here, I'm looking to buy above a strong bull bar. Instead, I'm getting offered a bear bar. To me, this looks a little bit more like a leg in a trading range. Again, the context was really good for the bulls, so it was possible that we continued to the upside. But I just wanted a bull bar closing near its high, and obviously it never came. Either a bull bar closing near its high or a pullback would have been acceptable. And as you can see, we didn't get a really deep pullback. Usually when most traders want to see a deep pullback, you don't end up getting one. Because what will happen is traders will buy a small piece at the market, but too many traders end up doing it, so you never end up getting the pullback that they were looking to add on, and they have to add on higher. So sellers above 6 during bar 7. So it's a high 1 for the bulls, but high 1s, again, in general, usually lead to deeper corrections and then trend resumption. And you can see we do end up pulling back. So there were some bears willing to sell above bar 6 and try to make money. It's also notable that we have an open gap with the bar 4 low and the bar 4 high and the bar 6 low. So we have that open gap. We have this open gap. So we'll see. The bulls are getting open gaps early in the day, and it's a possible small pullback bull trend from the open. And again, the context in the bear trap, it's all good, but I just don't see why we aren't getting good-looking bull bars here. It's all just disappointing bar after disappointing bar after disappointing bar. So it's really, again, not as great as you would like it to be. Bar 7, you can see we traded above. So, okay, I was just talking about bar 7. So bar 8, an inside bar, it's a high 1 for the bulls. 6 was a high 1, it got a pullback. 7, yeah, I suppose you could argue 8's a high 2, but I just view it as a high 1 since we broke above a new high during bar 6 or bar 7. So I think of 8 as a high 1 for the bulls. And what do high 1s again usually lead to? Deeper pullbacks and then trend resumption. So everyone sees this gap as well, and traders are wondering if we're going to pull back into this area or if we're going to remain above it and keep an open gap for the bulls here. But again, do you want to buy this inside bar? You're paying a pretty, it's pretty average price, I suppose. We are around the average price, but to me, this looks like a leg in a trading range. I still do think we're probably going higher, but I think that if we're going to go a lot higher, then I should be able to find a bull bar closing near its high to buy above. Just, vast majority of the time, if you're not getting a bull bar closing near its high, there's probably something wrong with your bull trend. We have an outside down bar on bar 9, so it's possibly a double top 7, 9, possibly a micro wedge 5, 7, 9, something like that. But yeah, I don't really want to sell here. I don't think the context is all that great for the bears. I think we're probably in a more neutral area. Bulls, they see some sort of two-legged correction. So to them, 6 is the first pullback, and then we have a pullback on bulls part, and now we're expecting a second leg down. 9 is the second leg down, and so the bulls want the bull trend to resume, and you get bar 10. The problem with bar 10 is we have a tight trading range from bar 6 to 10, and we cannot get a bull bar closing near its high. So that's a problem for the bulls. If you're buying above 10, you're taking a chance that it's a high 2, and it's a double bottom bull flag with bar 6. We're hoping we're going to keep the gap open with the bar 4 high and the bar 6 low. So if you're buying above bar 10, you're thinking it's a bull trend, double bottom bull flag, and you're going to get a swing up. If you take the buy, your risk is about 7 points, and you're trying to make 10. So ask yourself, do you probably need a 60% probability of reaching that target before you go down here? And do you think it's 60%? I don't know, probably not really. Maybe it's probably a little better than 50-50, or maybe it's somewhat 50-50, but I just don't really, in general, double bottom bull flags are 40% trades. I think that's a different situation because the context is a little bit more bullish. So the probability might be a little bit higher, but it's really just not what you want if you're looking to trade in this area. So I think it's a lot better to just wait and see if you can get a good looking bull bar closing near its high, which obviously never ends up coming. 11, another bull bar. So we have climaxes, bar 5 and bar 11. We could be setting up some sort of parabolic wedge. We did get a parabolic wedge yesterday on Monday, and now we're getting another parabolic wedge on Tuesday. So when you get a couple of parabolic wedges early in the week, it's possible that we might end up getting some sort of variant of a parabolic wedge on maybe Thursday or Friday or early next week or something. Sometimes the market will get into moods where it repeats patterns. So you do have to keep that in mind. 12, another bull bar. You can see we have an open gap with the 4 high and the 6 low that has not closed. Now we are closing far above the bar 9 high. So to me, that gap is now very clearly open. We also now have another gap with the bar 9 high and the bar 12 low, and bar 12 is a bull bar closing near its high. Look what happened though. 3 bars, 2 with tails, all 3 with tails, I guess. 3, 4, 5, and then another 3 bars, 10, 11, 12. So we're probably going to pull back. 3, 4, 5, two-legged correction, 10, 11, 12. We did get another two-legged correction. However, the correction was more sideways to up than it was sideways to down. So 12, another good bull bar, but not quite on its high. And if you're buying, your risk is really large. It's not wrong to buy, but if you're buying, probably have a relatively probably scalp at least half with 5 points if your true risk allows for that. So your risk was you only had to risk about 2.75 points, and you would have been able to make your 5 points pretty quickly. A lot of traders will end up scalping because they know we're a bit overdone to the upside. In general, when you have some sort of, you got to keep in mind this parabolic wedge on a higher time frame chart. So it started here and it ended here. It's a breakout bar. See, it's a channel up on a lower time frame, or a higher time frame. It's a channel up. So you have to keep in mind that while it was a wedge, this is probably going to be a minor reversal, and you can look for trend resumption rather than trend reversal. Obviously, there's, today's case was a little bit different because this was a really strong pullback, but at the end of the day, it just ended up being 2 legs down, 1 pullback, 2. I don't think there was any sort of symmetry in the 2 legs down. I think the first leg ended up being a lot bigger. Yeah. So no real symmetry in the legs, but I think it's still important to note that it was just 2 legs down and then a reversal up around bar 40. So my main point overall with what I was just saying is anytime you have some sort of some sort of strong move on the opening 18 to 20 bars, and then you start to go sideways, you look for trend resumption around bar 40 in either direction. And you can see it was a little bit later, but we ended up getting trend resumption a little bit after bar 40. So 13, a bear bar, closing somewhat near its low. It's a parabolic wedge, 1, 5, 13, but I am not selling below that. This is way too bullish, and it's a doji bar. You're selling against 10, 11, 12, three really strong bull bars on a day where stop order bears have not done anything except for get trapped so far today. They got trapped on bar 2, they got trapped on bar 9. So what do you think is going to happen on bar 13? They're probably going to get trapped. So to me, I'm never going to try and be the first stop order bear to make money on a bull trend day. I think I would just rather wait and either be long or flat. So probably buyers not too far below 13. 14, a bull bar, but a tail on the top. To me, this is a high one buy for the bulls. We have this open gap. We have this open gap. So the bulls, you see, I didn't personally consider the gap to be clearly open until we got the pullback and then reversal and a close above the prior high. So to me, once we get a close above the 13 high, I consider this gap to be open. Until then, it's just a magnet. It still is a magnet after it closes, but this is an open gap, and you're just basically waiting to see if we pull back into it before we get a close above the high. If we do get a close above the high, it's a possible small pullback bull trend day. But my main issue with thinking that this is a small pullback bull trend day is that we have not had good looking bull bars closing near their highs. A lot of them, we've had a lot of bull bars, but most of them end up having tails. So it's a little bit concerning for me. So 15 consecutive bull bars, but you can see, look at the problem. 15 is unable to close on its high clearly above bar 13. So what are we getting here, right? How much higher are we really going? I'm not that sure. To me, we're probably going to need a second leg sideways to down. And the reason being the parabolic wedge on 13 probably is going to lead to 2 legs to sideways to down. It's not a good sell. It's probably just a pullback, but you can see we did end up getting the second leg sideways to down on bar 16. Very high probability that there are buyers below 15 consecutive bull bars and in a bull trend, always in long. And you're waiting basically just to see what happens down. 16, an outside bar. You can see the 15 high and the 16 high are the same, but you can still consider it an outside bar. So 16 is an outside bar, tail on the top, tail on the bottom. The bulls are hoping that we're going to get another outside up bar and get a strong rally above the high of bar 13. And the bears, if we do get an OO pattern, they're hoping to get a sell below and swing down. 17 is another outside bar. It's at the low of 16, but it can be considered an OO pattern here. It doesn't look the cleanest, but this is an OO pattern. So OO patterns are possible final flags. It's a breakout mode pattern, right? So breakout mode patterns and final flags are generally, thrown into the same category. They're just called different names depending on the context of where they are. Sorry, 1 second. Some water. So to me, the context for this is a final flag. And if it is a final flag, it means if we do break out above it, we're probably going to come back into it. So 18, a bull bar, but again, not quite closing near its high. We're testing into the possible magnet area, which is, see, we had a spike and then a bear channel. We were testing towards the high of that bear channel. So to me, this whole thing is kind of somewhat of a trading range. You can see we kept hitting resistance in this area. We sold off, we sold off here, we sold off here, we sold off here, and over here you can see we started to go sideways. So probably in that same area. And imagine, this whole thing is kind of just a big trading range, but obviously the entire thing, we're in breakout mode. If you look at the past couple of days, it's kind of that pattern that I talked about on the, a couple of weeks ago in one of my videos, but you can see we have an expanding triangle and then it starts contracting. So it's a breakout mode pattern. So to me, we're probably starting to come towards the apex of the triangle. We might get a big gap tomorrow. Some traders call this a diamond pattern, but really what you need to know is that the market is in breakout mode and we had an expanding triangle and then a contracting triangle. So where do we go? I don't know. Maybe we get a breakout. Wherever we start to get the breakout to the downside of the upside, you have to keep in mind it's breakout mode pattern. So when we start to get the breakout up into this area, let's say we get it tomorrow, 50% chance it fails and starts to get a violent reversal down. If we start to get some sort of sell-off tomorrow, and you get a violent reversal up, you have to remember 50% chance the sell-off is going to be minor. So you have to keep that in mind. All right, 19 consecutive bull bars, but tails 18, tail 19. I don't know how much higher we're going. Again, still a parabolic wedge, 7, 13, and 19, but you can draw wedges in bull trends. You can constantly draw wedges, and they usually end up being meaningless. So you do have to keep in mind this might be a small pullback bull trend from the open, but you also have to keep in mind that bulls, they're really not getting as many bull bars closing near their highs as they should be for this to be a strong small pullback bull trend. And then 20, a disappointing doji bar. We had a lot of doji bars so far in this bull trend, and not enough bull bars closing new highs, so it could be the end of the buying, but I'm not selling below a doji bar. 21, a bear bar, triggers below 20, probably buyers not too far below, but it is a third reversal down, so it's not worth taking any sort of buy. And probably sellers above 21 if we end up getting there. Again, it's a spike in channel, so to me, spike 3, 4, 5, and then this was the start of the channel up. You can see we tested back into the channel, or into around the start of the channel, because that is always going to be a magnet. You could also just say we had a spike and then a tight trading range and then another spike channel, and we tested back into the tight trading range. I don't think that's wrong either. There's just a lot of different ways to look at it. So long as you know what's going on, it doesn't matter what you call it. 22 is the give up bar from the bulls. So the bulls have decided to step aside for a few legs sideways to down. Do you sell 22? I mean, the reality is it's going to get a lower high in a second leg down. So you could sell the close of 22 and put a stop above 20 and just look for another leg down, because 22 is a big enough bear surprise that I'm expecting another leg down from it. But for me, I don't really know if I want to be doing that. That's not, again, my for myself, I'm taking one or two of the best trades a day. That's my goal. And that is not the best trade of the day, so I am not taking it. The doji bar 23, which is a low one short for the bears. Some bears might sell it. Some others would wait for follow through, see if we're going to end up closing gaps. And the bulls, they're hoping there's buyers below the doji bar, but we'll end up seeing, obviously, as we did on bar 24, that we got a bear bar closing near its low. The bulls are hoping it's some sort of second leg trap. 1, pullback, 2. So maybe we had some sort of symmetry within this leg. We had a 1, and then a pullback. So not quite, but 24, a bear bar closing near its low. You have to keep in mind, we have this little open gap, we have this open gap, and we have this open gap. So the first target for the 24 bears who are selling below 24, bear bar closing near its low, is this. And if you're selling, you're taking a chance that we're going to collapse straight down into this area, or maybe even a new low of the day. And we're not going to end up getting a second leg up for the bulls. A lot of times, this is the same situation where a lot of traders want to sell, but they're hoping for a pullback, but it might not end up coming. So if you sold below 24, you were taking a chance. You got a violent reversal down on 25. And for a little while, you did. 25 ended up becoming a pretty large bar, but it ended up getting bought back up into a relatively disappointing area. So if you sold below 24, you were disappointed with 25, and you can see the traders who sold 24, disappointed 25. The low where they'd need to get out with 5 points is one tick above the low of bar 26, showing that bears, instead of selling more on the close of 25, decided, it's probably a trading range, buy climax low, I'm just going to get out. And they scalp out with 5 points and wait for the next trade. So for the bears, 2026 ended up being a profit taking bar, where they ended up scalping out with 5 points because they were disappointed in how 25 closed. The bulls, this is a low one short. First off, 26 is a low one short. So the bulls know there's probably going to be buyers not too far below, scaling in lower. It's 2 legs down. The first leg down, 21, 22, pullback 23, and then 24, 25. So it's 2 legs down, probably buyers below the bull bar. Since it's not a bear bar, you would expect there's going to be buyers below a low one short that is a bull bar towards the bottom of a trading range. So you imagine there's going to be buyers there, and there were during 26, reversal up 27. I'm not buying above 27. It's probably okay to exit your shorts. It's micro double bottom, 20, 25, 27. So a lot of traders might exit. You get a sip of water. Okay, so it's a micro double bottom, 25, 27. Some traders might exit above 27, but it's probably not a great buy. If you're buying, you're betting it's maybe some sort of high two, but we have a bear micro channel from bar 20 to bar 27. So the first reversal down is probably going to be minor. 28, a bear bar, but just a big doji bar, really. We have quite a few doji bars here. 27, 28 consecutive doji bars. Probably buyers not too far below, probably sellers not too far above. Looks to me like the bull move up from 3 to 20 was not a bull trend from the open, and it may have just been a leg in a trading range. And so the question becomes, we're probably going to get one more swing trade on the day, right? We're kind of in the middle of the day's range, and we had a reasonably big move up and a reasonably big move down, but it's still pretty early in the day. So you'd imagine some point over the next 50 bars, we're going to get another swing trade. So the question is, when is it going to come? So you can see buyers below 29 during 30. And usually you have to keep in mind around bar 40, the market will try to make some sort of reversal. And you can see that's 15 bars away, which is plenty of time for a correction in either direction. So to me, I'm waiting for bar 40, most likely, or 38 to 42, something in that window to see if we can get some sort of reversal. 30, a bull bar closing near its high, but a tail on the top, and it's not able to close above the bar 28 high. The bears see a two-legged correction. First leg 26, 27, pull back 28, 29. Second leg up 30, and we're at the moving average. They want a low too short to continue the second leg down. So really not that good. The bulls are hoping it's the start of some sort of bull trend, but I don't really think that it is. It's not a very good area, and the bar, big risk. It's just really not that great. Disappointing follow through 31, probably buyers below. You can see buyers below during 32. But who wants to buy above 32? The bulls are hoping it's a breakout pullback from 30. So 30, 31, and then pull back, buy above 32. No one wants to buy above a bear bar, closing right at the moving average. This is not that good for anybody. 33, a big bull bar, but it's climactic. It's one push up, pull back, two pushes up, pull back, three. And if it is a breakout, it's right at a measured move up with this tight trading range. So this general area is probably more of a profit-taking area than anything. It's probably also around a 50% pullback. It's a little deeper, I think, but yeah, it's in the general area of 50% pullback for the bears of this spike. So it's really not all that great to be buying 33. If anything, I'd rather just be flat. Third leg up, climactic third leg up, big bar, big risk. 34, betting on a bull trap. Some bears will sell, but the tail on the bottom. So really not what I wanted to see. You're hoping to get a little bit of a better bar closing near its low. And a failed breakout above the wedge. You could argue the wedge was 26, 28, and 31, or you could just look at the three pushes, 27, 30, 33. Either way, you could argue failed breakout above a wedge or just a wedge. Doesn't really matter as long as it's three pushes up and the bulls are failing. So probably when you see 34, expect two legs sideways to down. 35, another bear bar, but we have tails 34, 35. So really not all that great. The bulls are hoping breakout 33 and pull back 34, 35, and we're going to continue up, but it doesn't look that great. They'll move up, looked climactic. 36, tails 34, 35, 36. So again, really not all that great to me. I would rather just be flat. It's possibly a micro wedge on a smaller time frame, 34, 35, 36, but it's not worth buying anything here after three straight bear bars. The bulls are probably going to use any sort of bounce to sell over their longs after we get three straight bear bars. And we're probably going to get a second leg sideways down, but how strong is the second leg sideways down going to be when the three bars leading up to it have big tails? Outside bar, outside up, 37, a big tail on the top and a tail on the bottom. Really not that good. Again, the bulls want to break out above the high, the 33 high, and some sort of measure move up. I don't know if they're going to get it. You can see 33 was also testing the most recent sell climax high, which is the bar 24 high. 38, an inside bar, so it's an IOI pattern. 36, 37, 38. So it's an inside bar, but you're selling near the bottom of a tight trading range. The bears see a lower high major trend reversal. So we have a bull trend up to bar 20, trend line break 21 through 25, and then a lower high major trend reversal on 38. So you could sell below 38 for a swing trade. I think it's probably not as great of a scalp, probably more of a swing trade. But the thing about swing trades and trading ranges is a lot of them convert into scalps, like bar 24. Bears sold, and they ended up being disappointed. They scalped out with 5 points. Bar 38, bears sold, but they became disappointed in 39. And a lot of them ended up buying back shorts. 39 was a big bear bar closing near its, or not quite closing near its low, but it closed below its midpoint. And it was forming a big double bottom with bar 25. So 25, 39, double bottom, neckline, 33 high, and bulls want to break out and a measure move up. technically a higher low double bottom by a tick. They want to break out and measure move up, but I don't think they're going to get it. It's really not all that great. So bulls, however, get bar 40, and bar 40 is a bull surprise. Shows me that the bears were giving up, and we're probably going to get one more swing trade. The bears had a chance down 38, 39, failed, big reversal up 40, probably okay to buy above 40 for a swing. Bothersome that there's a tail on 40 and it's closing right on the moving average. I think the context is good, but I just wish the bar was a little bit better. 41, follow through for the bulls, but this lacks momentum. I think again, the argument of an upside breakout here is valid, but it kind of just lacks momentum. And that's kind of a hint to you that this might end up becoming a leg in a trading range more so than the start of some sort of big bull trend. So tail 40 and 41, you can see we get a pullback 42. There's going to be buyers for at least a scalp below 41, consecutive bull bars. So probably buyers down here during 42 and another leg up, 40, 41, 43, another leg up, testing around the bar 41 close. And the bulls who bought the close, it might be disappointed 42 and looking to buy back shorts. Question becomes, do you buy above 43? It's a high one for the bulls at the moving average. You probably can, but stop is down here, I think. Stop is probably not here. You might get a bit of a deeper pullback. It might just be part of a trading range, but it's reasonable to bet on this being that one more swing. You have to keep in mind, again, with the way the market moved up, it ended up being a leg in a trading range. 44, another bull bar, but a big tail on the top. So disappointment with, again, it could be some sort of double top with 33, 34. Not really as good as it could be. 45, 3 straight bull bars, but this is not enthusiastic by the bulls. It's just 3 straight, relatively lackadaisical bull bars. So I'm not really willing to take any sort of buy here. 46, an inside bar. It's a high one for the bulls, but it's a doji bar. I don't want to buy above a doji bar. So this looks like trading range price action to me. 47, another doji bar. So if you're a bull and you're long right now, I think at this point you have closes above the bar 41 high. So stop can be below 41. If you're a bull and you're long right now, do you feel, really happy with how this position is going, or are you kind of on edge because you think that it's, this is a leg in a trading range? You're probably a little bit on edge waiting for the bulls to give up. So being long here is a little bit of musical chairs, because you don't know at any moment the bulls could give up, decide this isn't worth it, and you could just as easily get some sort of really, quickly forming disappointing bear bar. Instead, you get a giant climactic breakout on bar 48, breaking far above basically these highs. So it's very climactic. It's trying to form a double top for the bears with 20. So it's 20 and 48. The bears want the double top. The bulls want the rally to continue, but the price action leading up to it was not really all that great. So I think the bulls need to do more if they want it to continue. 49, disappointing, an inside bar, a doji bar, but not able to close near its low. You can see 49, 50, 51, the bears were trying to get a bear bar closing near its low, and they were just never able to do it. They were trying to get the bulls who bought above 48 to be trapped in the market, and they were never able to. Had 49 been a big bear bar closing near its low, looking like 38, that would have been a good sell. And even if 50 had been a good bear bar, it would have been a good sell, but not as good because the bulls who bought above 48, disappointed 49, are using 50 to exit their longs. 51, another doji bar. So we have 3 straight doji bars. I'm not willing to buy. The bulls need to show me a lot for me to buy. So 52 is the high one for the bulls, but there's no way I'm taking that. It's the top of a trading range. And then 53, follow through, but it's not good. It needs to be larger and faster. I see 4 doji bars, so I'm not doing anything. 54, probably buyers below. And then 55, 56. Again, I think the bears were trying to form some sort of reversal here, but I wanted to see maybe a failed breakout of the high of the day and then a bear bar closing near its low. I think bar 49 and 50 were the chances for the bears to form some sort of clear reversal. It never ended up happening, and then we started to oscillate sideways. And for me, once we start to do this, I was looking for potentially the sell in here. I needed the bar to look right. I needed some sort of failed upside breakout in a bear bar closing near its low. But once we start to do this around the moving average bar 60, 61, I would just be done on the day. There's not really any reason to do anything. So another kind of difficult day for stop orders, I think. Not a lot of good ones that worked. You could buy above 3 if you're a really aggressive trader, but I am not, so I did not. You could buy above 12, it's buy the close. Technically, probably buy the close 5. You could buy above 8. I just would not buy above 10. It's a tight trading range to me. You could buy above 12, and really tough to buy anything else. You could sell 24, but traders end up scalping. And then you could sell 38, lower high major trend reversal. But again, traders scalp. You could buy 40, 43, 45, but really not as good as it could be. And I would just leave this kite trading range alone. Yeah, you'll probably be able to sell 56 in IOI pattern. It's probably not wrong to do that, and you would have made money, but I'm not. There's, we have 1, 2, 3, 4, 5, 6, 6 or 7 dojis within 8 or 9 bars. I'm not willing to do anything there. It's just not worth trading for me. On the daily chart, we have an IOI pattern for the bears, or well, the bears are hoping it's a final flag and we're going to get the breakout below. So this was their signal bar to get the strong sell off, and we got disappointing follow through for today. So the bulls, let me just zoom in a little more here. The bulls hoping this is some sort of high 2 above the 827 buy, and they want a breakout far above. Basically, remember I mentioned the quote unquote diamond pattern that was going on the 5-minute chart, really expanding triangle into normal triangle, but the bulls want a breakout far above that high, and they want to get up into this area, up to the all-time high. And the bears don't want to let that happen. So tomorrow, if we get a big follow-through bar for the bulls, then it increases the odds that we're going to go up to here. And if we get disappointing follow-through, I still think we'll get back up to this high. I think the bulls who buy here, if they're willing to scale in, are going to make money. But I think everyone knows this is a leg in a trading range, just as much as this was. So the question is becoming, are we going here first, or are we going to start to go sideways first? The weekly chart. The weekly chart, 3 straight bull bars after 3 straight bear bars and a large gap down. I don't think it's late enough in the week for this to be super relevant, but we got back to around this close and we might be starting to sell off. But the monthly chart's very relevant. We're getting towards the end of the month, and the bulls, they would love for this month to be a bull bar closing near its high. If it went outside up and broke strongly above last month's high, that would be good, but it might be a little climactic. I think we might be getting too far away. We only got 3 days left in the month for trading, and the bears need to move 65 points. So it's actually not that much, but the bears are really trying to get a bear close this month. The bulls, the bulls want a close on the high, obviously, but it's more important to the bulls to get a bull close than it is to get a bar closing on its high. So, all right, that's going to be it for the review.